Ladies and gentlemen, welcome back to the channel. Bitcoin and risk assets coming under some pressure today. We'll explain why and what's happening in markets. Give you all the news you need to know and the fluff you don't. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you guys want to come trade and invest alongside us, come join the community over there. With that said, let's get started. So first and foremost, let's get into what's happening in the broader markets today. You can see the Russell 2000 is the underperforming index, only up 0.09%. NASDAQ is the outperformer today, up 0.69%. S&P is up 0.53%. And the Dow is up 0.43%. You can also see the VIX is down about 1% today. It's a 15.61. The VIX continuing to fall shows there's not a lot of fear out there in the headline S&P, which, yes, this makes sense because the S&P is near all-time highs, but there's still quite a bit of fear out there in single stocks, okay? And you can see this reflected in the CNN Fear and Greed Index. It's kind of hard to measure the fear in single stocks, but if you look at the CNN Fear and Greed Index, the headline number is still in fear. Market momentum is greed. Look at this. Stock price strength, extreme fear. Stock price breadth, still in fear. Although you have seen a recovery in the last couple of days, it's just really been in the last couple of days you've seen this recovery, right? There's still a lot of fear out there in single stocks, not as much of which in the broader index, okay? Put and call options in fear, market volatility is neutral, safe haven demand, extreme greed, and junk bond demand is currently in fear. Now, we did have a new AI investor sentiment survey that came out yesterday showing bullish investors skyrocketed from last week, now up to 44.3%. Neutral investors fell a little bit from 25.3% to 24.9%, and bearish investors fell a lot from 42.7% to 30.8%. So big rise in bullish investors, big fall in the bears, which, you know, you're going to expect to see that when the headline S&P is near all-time highs. 10-year treasury yields today are up a little over one basis point today, closer to about 1.5 basis points, sitting at 4.12%. So 10-year treasury yields have risen about 13 basis points from the low we've seen recently. So yesterday, it's kind of surprising that risk on small caps, the AI trade did well, considering 10-year treasury yields have went up recently. Now, we do have some economic data that we will share with you today, but first I want to go through the rate cut probabilities because this is one of the things that continues to move this market. What's the Fed's path in cutting rates? Although I think that's a lot less important than most people think. I think you really just want the AI trade alive and well, and you want the economy doing well. Preferably, you want the consumer to get stronger. You want real estate to start moving again for volumes to pick up and inflation to continue to fall. What the Fed does with their federal funds rate, I don't think is too important. Next year, all things considered, if those other areas get better and improve, you don't need to see rate cuts. Now, December 10th, you're going to get a rate cut. There's still like an 85% chance of this. It's not going to move around a whole lot. You're going to get a rate cut December 10th, okay? January 26th, that is what is going to move based on the economic data that we get. And surprisingly, let's refresh this to make sure we're up to date here. It doesn't look like there's a whole lot of movement in the probability of a January rate cut as of today. The odds of a rate cut for January 26, 2026 stand at 27.3%. There's a 62.3% chance of a pause, of no rate cut. For March 18th, the odds get a lot closer. The odds of a cut in December and then a cut in March stand at 38.7%. That's actually down a little bit today from 40% yesterday. So like 10-year treasury yields rising, the yield curve rising a little bit today based on the economic data that we got, and which we'll go over in just a moment, are dropping rate cut odds a little over 1%, which could be putting some pressure on that risk on trade, on that small cap, specifically AI trade. The odds of a cut in December and then no cut in March stand at 45.5%. And currently, as of now, the markets are pricing in a cut in December and then a cut on April 29th. The highest probability here is for a cut at 40.3%. The odds of only a cut in December and then no cut in April stand at 36.4%. So again, with the economic data that we get from here, you're really not going to move the odds of a December 10th cut. Like, that's going to happen regardless. But you are going to move the odds for January, March, April, and deeper into 2026. Okay, so for core PCE price index month over month for September, you came in line with estimates of 0.2%. That was the estimate. You came in line. And last month that we had was at 0.2% as well. Personal income month over month came in at 0.4%. You were expecting 0.3%. That is in line with last month's reading here. Personal spending month over month came in at 0.3%, in line with estimates, but down from last month 0.5%. Last month was actually revised down from 0.6% as well. So on face value, these September numbers look in line or slightly better than expected. The Michigan Consumer Sentiment Survey today is where some of the more shocking implications are. Okay, so keep in mind, the Michigan Consumer Sentiment Survey is a survey of like 200 people and 70 to 80% Democratic. So they tend to believe, the economy is going to suck and inflation is going to be high. But that is not what we got in the numbers today, which is shocking. The headline number came in at 53.3 versus estimates of 52. Last month was at 51. So you came in better than last month and higher than estimates. Look at this. 5-year inflation expectations came in at 3.2%. Last month, you were at 3.4%, and the estimate was 3.3%. This is the lowest 5-year inflation expectation, like in the next 5 years going ahead, people's expectations, in 11 months. Okay, so people have not felt this good about where inflation is headed in a while. Okay, 1-year inflation expectations came down to 4.1%. From last month being at 4.5% and the estimate being at 4.4%. So you were expecting 4.4%, you came in at 4.1%. This is, again, the lowest level in 11 months. The only time we were lower than this was January 2025. Okay, now you're still elevated compared to where we were in, 2024. Again, it's a Democratic survey, but like that that should be known. Even back in 2022 and 2021, when inflation was 9%, the highest inflation expectations got over the next 5 years was 5.4%. Back in April and May, you hit a high of 6.6%. Just to show you again how political this data set is. Nonetheless, the markets pay attention to it. So an 11-month low today in inflation expectations is great. But consumer expectations came in way ahead of expected or expectations at 55.0 versus the consensus number here at 51.2. So a big strengthening in consumer expectations. Current conditions came in at 50.7 versus expectations of 51.3. So honestly, I feel like the rate cut odds should have went up today on the data that we got. So I don't think that makes a whole lot of sense, just considering inflation expectations fell. But consumer expectations improving so much would be the thing you'd point to possibly why rate cut odds actually fell a little bit today and put a little bit of pressure on that risk on trade. And again, you can see here the University of Michigan survey here. The short and long run inflation expectations fall to 11-month lows. So I'm actually a little surprised that, again, rate cut odds are not moving up further down the curve. Now, China's Vice Premier He Lifeng held a call with U.S. Treasury Secretary Bessent and U.S. Trade Representative Greer. He says, quote, "We agreed to promote stable development of economic and trade ties." He says, quote, both sides agreed to expand the list for cooperation. Bank of America says the market could soon price a January Fed cut. Bank of America says markets might start betting more aggressively on a January rate cut despite the Fed's cautious messaging. The bank expects a 25 basis point cut in December with tougher guidance and several dissents, along with projections showing stronger growth and lower inflation. Bank of America doubts Powell can credibly push back against expectations for further easing, given the heavy data flow before January, with markets focusing on incoming numbers. Analysts say Powell is unlikely to shift expectations away from data dependence. Donald Trump says today, I have approved tiny cars to be built in America. Kevin Hassett today says the AI economy is moving faster than the 1990s dot-com economy, but the shutdown had a bigger hit than expected. Now, Kevin Hassett says he backs Bessent's view on the Federal Reserve Bank and presidents. He says he has not discussed the Fed president's issue with Trump. He says that it would be a massive disruption if the Supreme Court nixes tariffs, like the government would have to give out refunds and things like that. There's already a bunch of companies signing up to get refunds if the Supreme Court does rule against Trump's tariffs. Now, White House senior advisor Kevin Hassett says that the 232 and 301 trade measures are among the backup plan. Kevin Hassett says he would be disappointed with 3% growth for Q1 and Q2. Hassett says there is massive momentum into next year as factories open. Kevin Hassett says we could be looking at a 4% productivity figure for 2026. And Hassett says there'll be a bigger rebound in the first quarter because the government shutdown hit harder than expected. And Hassett says it is time for the Fed to cautiously reduce rates. Prime Minister Mark Carney of Canada has said that Canada's trading relationship with the U.S. was once a strength, but now a weakness. Layoff announcements top 1.1 million this year, the most since 2020's pandemic, per CNBC. Also in the news today, for anyone investing in this area, the U.S. is planning more stakes in minerals companies, per Bloomberg. So obviously what's happening in Bitcoin today, Japanese treasury yields continue to rise, the yen carry trade, a little bit of pressure there. There's always some nervousness heading into a weekend. That's pretty typical. That's not a shocker. So you get all of this coming together with yesterday being such a strong risk on day for risk assets like small caps, the AI trade, even Bitcoin did very well. And you're getting a little bit of a give back to some of that. But next week, we have big catalysts. Next week, we have the Fed. We're going to be getting a rate cut. And I think the markets might get a little nervous around the Fed, but I don't think we're going to hear a whole lot. I don't think we're going to get any strong signaling in either direction for more cuts or for a pause. We get our big data points coming out on December 16th, and that is going to be the big catalyst that propels this market into the end of December. Now, we're going to have smaller data sets as well coming out next week, but the big story is really with the Fed. I made the argument plenty of times before that 2026 looks good from an investing standpoint. Lots of things to be excited about for 2026. And from a tactical perspective into the end of this year, there's a lot to be excited about for a potential Santa Claus rally as well. But, on a day-by-day basis, you can have a red day or two, and that is what we're getting today. But I do think the Santa Claus rally has started, and we are in the Santa Claus rally right now, the December Santa rally, if you will. So hit that like button as well as subscribe to the channel. Let me know if there's something I missed down below in the comment section that should have been covered in today's episode. Check that link out down below, again, in the description of today's episode if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.